Hello and welcome to Experience Realty. My name is Tarun. $1 million question is a thing of the past. The question in vogue in Dubai real estate market nowadays is, I have 100 million dirhams. Where and how do I invest? Dubai is fast emerging as the crown jewel, which UHNWIs and HNWIs across the globe are vying to get their hands on, but cannot get enough of. The lure of this city is too hard not to fall for. Now, I'm not going to bore you a lot by telling you the number of HNIs and UHNIs who moved to Dubai last year. But what I can tell you is the Centimillionaire report by Hendy and Partners 2024 projects that cities like Dubai and Abu Dhabi are going to see a 150% increase in their millionaires and billionaires in the near future. Now, these well-heeled souls who are looking to move to this city and foray into real estate are confounded by certain vexed questions which they need to ponder, mull, and deliberate over. These questions happen to be an inherent part of this investment decision. Now, what are these questions? Should I foray into development? If I do, what is the outlay and what are the margins? If I forgo the aspect of development, then what is the investment strategy? What properties should I buy? Should I look at diversifying and investing in multiple projects in different areas? Or should I look at consolidating? What is the entry and exit strategy? And last but not the least, what do I stand to gain from this investment? Now, the scope of this video is to answer all of these questions and give you clarity in the form of an investment strategy, which, if executed correctly, will create significant value for you. In my humble opinion, this happens to be my outlook on the subject. Yeah. And as I always say, do your recce, your due diligence, and do your number crunching with your financial consultant. Once you're 100% sure of all the variables involved, take that evolved and informed decision. As they always say, if you're standing on the edge, you're taking too much of space. Take a step back, analyze the situation, and then make that call, which you will not regret at a later stage. Access to 100 million dirhams opens a lot of avenues for you in Dubai. The avenue which I see a lot of investors looking to foray into is that of development. These investors, buoyed by the words of wisdom and hearing success stories of people making it big in the realm of development from some accidental brokers, want to don the garb of a developer and get projects off the ground, because this represents their fast-track route to making unfathomable gains. Being a part of this industry and having worked with people who have made it big in development, I can tell you the route to making it big in development in Dubai is to create a brand. To create a brand, you need to launch projects, not a single project, projects in areas which are sought after. Price them in a lucrative way where investors investing with you make a profit. And the most important deliverable is for the project to transcend into a reference point when it comes to quality, capital appreciation, and rental yield, as these factors drive the brand value. Simply put, the game of development in Dubai requires experience, background, and a thorough knowledge of this dynamic real estate market. If your intent is to establish a brand, then have access to $1 billion dirhams and have time at your side in order to create a brand. Simply put, a single project with no background in the best possible case scenario will yield 50 to 60% profit for you. Is it worth the hustle and the hard work? Where you can have more befitting strategies where you can curtail your outlay and have more spectacular results? I can assure you from my experience and my background, My investors have replicated this strategy over and over, again and again, and every time the results have been exponential. My strategy is very simple, and it is based on Occam's razor theory, which is a guiding principle of logic, encouraging us to keep things simple. I'm sure you must be thinking this guy has lost the plot. Well, if Albert Einstein can develop the concept of relativity by using this principle, then I'm certain Dubai real estate market can also benefit immensely from this. Simplicity is often the most difficult to comprehend. The simple answer to your conundrum of where do I invest my 100 million dirhams and how do I maximize the result is by investing in established developers. In doing so, you lot will be treading on the path which many before you have taken and have created portfolios which have yielded 100, 200 or even 300% profit. Now, how do we execute this strategy? To start with, focus on upcoming areas. No points for guessing. Invest in areas where the government is investing heavily. Choose communities which are nascent, upcoming. With the infrastructure taking shape, the location will warm up and the prices will increase. Now, I'm going to give you not one, but 3 projects in upcoming areas where you, by investing today, can get the results that you are seeking. To start with, Palm Jebel Ali. Now, if I talk about Palm Jebel Ali, you are foraying into one of the last opportunities to secure a villa on the waterfront in Dubai, starting at 20 million dirhams. Now, the same villa on the namesake of Palm Jebel Ali, that is Palm Jumeirah, is today transacting at 60 million dirhams. Yeah? So you're entering into an area which is upcoming, buying at the rock bottom. With time, with the infrastructure taking shape, this will also increase. My second option, which is also a plum opportunity, in lieu of its location in close proximity to the business, commercial and financial hub of Dubai, and the heritage hub of Dubai happens to be none other than Dubai Islands. Now, why Dubai Islands? With 60% of the population still living in the urban hub, 70% businesses operating out of the urban hub, this on its own should be motivation enough for you to invest in Dubai Islands. But the icing on the cake happens to be that these areas are largely leasehold. So there is exponential demand, but the supply is teeny weeny. And last, but by no means the least, is the Oasis by Emaar, which in lieu of its strategic location in close proximity to Al Maktoum Airport, where the government and developers with 30 to 35 years of wealth of experience are expending $500 billion. Now this reduces my risk immensely, because if the government and developers with 30 to 35 years of wealth of experience are investing here, then 100% I am safe, sound and secure. Okay? The second part of this strategy is to focus on unique products. Uniqueness and exclusivity always drive demand. Simply put, a Palm Jebel Ali, Dubai Islands or the Oasis will always create a frenzy in the market, because investors as well as homeowners understand that these projects represent the pinnacle of development and are launched by developers once in decades. Understand, looking at it objectively, if we see Palm Jebel Ali, then you can afford to buy a villa starting at 2,700 dirhams in a project like Palm Jebel Ali only in lieu of the foresight and vision of Nakheel. Nakheel had this foresight that Dubai will be the cradle for UHNWIs and HNWIs, and they started the foundation work of Palm Jebel Ali 20 years ago. Imagine laying the foundation of Palm Jebel Ali today, then acquiring a villa in Palm Jebel Ali for 2,700 dirhams per square foot will only be a figment of your imagination. Similarly, if you look at the Oasis, which is Emaar's first master plan around Azure lagoons and verdant parks with the lowest concrete density and that ginormous outlay of 70 billion dirhams. Now, even if Emaar wants to replicate a project like this, a project which is touted to be the blue community of Dubai, then it will take 20 years for even Emaar to replicate something like this. So uniqueness and exclusivity will always help your cause. Another important aspect that you need to understand is, contrary to the popular belief of putting your eggs in one basket, as my peers would tell you, put your eggs in different baskets. I beg to differ here, not just as a means of standing out, but we are looking at investing 100 million dirhams and the target is a minimum 100% profit. Now, imagine if I have 100 million dirhams and I put it in multiple projects spread across different locations, then when I have to divest, I will be divesting out of certain properties, holding on to some, and then divesting at a later stage, thereby adding to my woes. Also, if you can acquire a lot by 100 million dirhams, then the exclusivity or the uniqueness goes out of the window. In doing so, when you tap into the affordable segment, you are engaging with an audience, with all due respect, who are very price sensitive. And you or your consultant will have a tough time because these investors or these end users have a plethora of choices to choose from. Thereby, the divestment process will be complicated. Understand, all areas in Dubai yield similar, if not the same appreciation. If Emaar beachfront has yielded 100% appreciation, then so have Valley and Emaar South. They've also yielded 100% appreciation. So rather than diversifying, consolidate and keep it simple. I reckon the stage is now set to let you in on the project which you should be investing into. With Palm Jebel Ali villas fully sold out and a launch of villas in Dubai Islands nowhere on the horizon, the obvious choice is the Oasis. Now, why villas and why the Oasis? The answer to this is fairly simple again. If you look at the price performance of the villa category, then Q3 of 2024, the villas had an average per square foot price of 1957 dirhams, which was 34.3% above the previous recorded high of 1455 square foot, which was 2014. So you can understand that the maximum price appreciation has happened in the villa segment, and hence I am telling you to invest in villas. Another important aspect of my choice of villas is the skewed demand supply situation. Now, the economics of demand and supply are very important in every aspect of our life, and this includes real estate as well. If you look at the total availability of villas in Dubai, then with only 153,000 villas in Dubai today and a projected addition of 65,000 villas over the next 5 years, you are talking about 213,000 villas by 2030. And even if I be very conservative and we focus on a moderate population increase of 4.86% over the next 5 years, at that point the population will be 4.7 million, but the availability of villas will be only 213,000. Now, I'm sure you are evolved enough to understand that what this would do to your prospects of having invested in a villa. The answer is fairly simple: exponential appreciation and amazing returns. The only questions left to contend with at this stage are the entry, the exit, and how much do we stand to gain from this investment decision. And as I've been telling you all this while, this happens to be my strategy based on my analysis of this dynamic real estate market. Before executing this strategy, take a step back, do your assessment, and then take the plunge. In my opinion, without an iota of doubt, the 100 million should be deployed towards acquiring 10 5-bedroom villas in the Oasis. These villas come with an expansive plot of 11,000 square feet and boast a generous built-up area of 10,300 square foot. These villas back on to tranquil water canals or verdant parks. The villas have a price tag of 15 million dirhams each. Now, buying 10 villas entails us to a total outlay of 150 million dirhams. Don't be flustered. At no stage will you be paying 115 million dirhams. Your outlay for this acquisition is what will startle you, which you will understand during the due course of this video. Now, Emaar gives you an 80-20 payment plan and you can divest after paying 50%. So after paying 75 million dirhams, which technically will be 2 years, we will be executing the first part of our strategy, that is to divest from 5 of these villas. Now, this being an Emaar property, finding a motivated buyer will not be a problem. However, I always like to plan for my rainy days, and since we have only paid 75 million dirhams, if due to any unforeseen circumstance we have a delay in finding a buyer or doing the sale, we still have the 25 million dirham safety net to fall back on to make the next payment. Even being in a market which is, a rage, everyone is talking about it. The price appreciation is phenomenal. And if you look at 2023, then the average price appreciation in this market was 20.14%. The average price appreciation for 2024 is projected to be around 16.4%. Even then, I'll be very conservative, and in 2 years of us holding these 5 villas, I will only factor in 25% appreciation when we are divesting from these villas. Now, with the 25% appreciation factored in, the value of these villas will go to 93.75 million dirhams. Yep. Now, by selling these villas for 93.75 million dirhams, I have made a profit of 18.75 million dirhams. Now, if I were to subtract or take this profit out of the total outlay which I have towards with Emaar, which is around 37.5 million for the 5 villas, then my total outlay with Emaar for the 5 villas that I'm holding today is 56.25 million dirhams. So as I was telling you earlier, you will see that the total you expend to acquire these 10 villas is not going to be 150. In fact, it is only 56.25 million dirhams for the 5 villas, where I still have to pay Emaar 37.5 million over the 2 years. So our total outlay is 56.25 million dirhams. Now, after having paid the 37.5 million for the 5 villas which we were holding on to on handover, even if I am being very conservative, come rain, come hail, come snow, these villas should sell technically at 30 million dirhams. And my reason for this price stems from a simple fact. Villas which can be considered contemporary competition to Oasis or are even remotely similar to the Oasis in communities like Tilal Al Ghaf, Jumeirah Golf Estates, Jumeirah Islands, Dubai Hills Estate, today are transacting at 30 million dirhams. Okay? Now, here a price tag of 30 million dirhams in this community does not guarantee you a villa backing onto a park or a lagoon. Then the Oasis, with all its bells and whistles, with the villas backing onto a park or a lagoon, I think it is reasonable enough to say that with its bells and whistles, the price for the Oasis can even go up to 40 million. Yeah. Now imagine if each villa is 40 million dirhams. By selling the 5 villas, we can get 200 million dirhams. Yeah. Now my outlay or my total that I have with Emaar to acquire these villas is 56.25 million dirhams. This means 233% profit. Now I know some of you lot will find it difficult to digest. Yeah. So let's look at a conservative scenario where I will tell you that these villas will sell only for 30 million dirhams. Yeah. Which is just like contemporary competition, the communities that I mentioned earlier. Even then, these villas will sell for 150 million dirhams. With my outlay locked in at 56.25 million dirhams, we will still manage to make 166% profit. Yeah. Now, if you still feel that I am exaggerating or these villas at 30 million also are a far cry from what they should be selling at, now let's look at the disaster case scenario. The disaster case scenario entails us to sell these villas at only 25 million dirhams. That's it. So by selling the 5 villas for 25 million dirhams, I can recoup 125 million dirhams. My outlay still remains 56.25, which means 122% profit. Now you can clearly see the strategy works. The only expendable from you at this stage is trust and faith in Emaar's ability to deliver as promised, which they have been doing for a good part of last 3 decades. Yeah. So Emaar communities in Dubai are the blueprint or the reference points on which Dubai was built and is being built. In lieu of this, I can tell you for sure that this probably is the best strategy that you have at your beck and call today in Dubai real estate market, which will give you the results that you seek. To conclude, in this century of innovation, some things are timeless. The wheel, for instance, perfect in its simplicity and never reinvented. Real estate investments are similar. They have weathered the test of time, and the mantra for investing in real estate, by and large, remains unchanged. Invest in upcoming areas, for they will transcend into locations of interest in the future. Do your due diligence. Do not do what others are doing. Understand the law of demand and supply. This is another very important aspect. And engage with a consultant who has your best interest ingrained in his way of working. Stick to the tried and tested. Do not reinvent, as the tried and tested has been working and will continue to work. In case if you need any further insights on how you should be investing your 100 million, then feel free to reach out. Please do like, share and subscribe to our channel. And this is Tarun saying sayonara until then.